Welcome back to the Investing House. My name is Brian, and I'm going to get right into it in this video. We are going to compare QYLD with the other Global X ETFs that are covered call ETFs. We're going to do the RYLD and XYLD as well. And this is not investment advice. This is purely just for entertainment and kind of just to see what is the possibilities of using these covered call ETFs if you don't know how to do covered calls yourself or you don't want to deal with doing that yourself. Getting right into it, we're going to start with XYLD. So these all three of these, if you haven't watched any videos about these before, I'm going to go over them briefly, but if you know about them, then you can skip to this timestamp and get into the bulk of the video. So the way that all three of these work is that they sell covered calls and return any premium that they make from selling the covered calls to you as a dividend. XYLD sells covered calls on the S&P 500. QYLD sells covered calls on the NASDAQ 100. And RYLD sells covered calls on the Russell 2000. And these are all indices and indexes that all cover a certain stock range. But we're going to scroll down, and they all say they offer high income potential. They seek to generate income through covered call writing, which historically produces higher yields in periods of volatility, which we are experiencing right now. So you can see on all three of these, they all say the same thing: seeks to generate income through covered call writing. They all do the same thing. So if you don't know what a covered call is, it's basically you're selling the right to buy 100 shares of a stock, or in this case, an entire index. And when you sell that contract, you are then paid a premium. The great thing about these ETFs is that you, the holder of the stock, you don't have to sell the covered calls. You just dividends paid back to you from the premium that they collect while selling the covered calls. Let's go ahead and jump into my spreadsheet. So I've made a different video on QYLD, which a lot of people, you may have seen that, and a lot of people thought that this was great. So I have this spreadsheet available. You can email me at brian@theinvestinghouse.com, and I will send you a free version of this. Before I get into this, I want to just say this is just for entertainment purpose. For our purposes here, we are not expecting a capital appreciation. I'm looking at this purely as though it's just income generation. So I don't really care about what the investment grows to be or depreciates to be. I don't care about that in this video. All I care about is how much money I'm going to be getting. And so I calculated the average dividend over the entire time that QYLD, RYLD, and XYLD have been around. So each one of these will have a dividend that is the average over the past several years, and that is what I will be using. And then I'm going to show you just a couple of different amounts that if you contribute specifically just to these stocks, how much money you can generate in 10 years, 5 years, 20 years, if you contribute that same amount every month. So we're going to assume here, we're going to start with 0 shares, and we're going to be adding $500 worth of stock into our portfolio. So I've got the average cost basis, or the current cost basis of $20.77. This is with QYLD for this sheet. That'll give you about 24 shares. So you can just see here that it slowly compounds. We're going to scroll down. So I got my years over here, months over here, number of shares you have. The dividend will never change, and then how much you were paid in total from your dividend. And then we're assuming that you're going to reinvest your dividend payments along with the $500 a month that you're putting in, or your monthly contribution. I know not everyone has $500 a month to put into their investments, so we're going to do a couple of different views or different numbers here. So starting with 500, let's scroll down and find 5 years. In 5 years, you'll be getting paid about $375 a month on average, which I think is great. Let's scroll down to 10 years. In 10 years, you'll be getting paid about $1,000 a month, and then that will continue to compound as well. So let's scroll to 15 years. In 15 years, you'll be getting paid about $2,200 a month, and 20 years, about $4,000 a month, $4,300 a month. I don't know what inflation is going to be doing to the ability, or I don't know what inflation is going to be doing at making it so our dollar is worth less, but I still think that $4,300 in cash flow every single month will be pretty significant in 20 years. At least I'm hoping that it will be. But so I'm 28 and I plan to retire before I'm 59. So let's say I'm 28, we'll go 28 to 50. So that's 22 years. If I did this until I'm 50, I'd be making about $5,500 a month. I hope that that's significant in that time frame, but I don't know if it will be. Let's do a little bit. We're going to do extremes. We're going to do, say I could do $1,000 a month. I assume that everything's going to be about double or half the time. So in 5 years, if I could do $1,000 a month, I'd be making about $750 a month. In 10 years, about $2,000 a month. In 15 years, right here, about $4,400 a month. And then 20 years, about $8,000 a month. Hopefully, that is, again, significant. And then, let's say you can only contribute $200 a month. In 5 years, you're looking at about $150 a month. In 10 years, you're looking at about $400 a month. In 15 years, you're looking at about almost $900. And then in 20 years, you're looking at about $1,700 a month. So you can see it obviously varies depending on how much you're able to put in every month. And this isn't a perfect spreadsheet. It doesn't account for inflation. It doesn't account for the costs of the stock possibly going up or down. It's assuming that the stock price never changes and that the dividend yield always will be the same. Now, that's not perfect, obviously, because those change, but we're going to assume that it's around the average. So this was with QYLD. I've shown this before. So now we're going to try it with RYLD. The dividend is a little bit higher. The cost is about the same as QYLD. But the cool thing about RYLD, if you look on their website, if you look over here at their net assets, it's not even $1 billion yet. And if you look at QYLD, their net assets is $6.3 billion. So the RYLD is we'll say about 1/6 of what QYLD is. So there's still plenty of, if it even gets close to QYLD in net asset value, the stock price will go up quite a bit, which will be great for anyone who's holding this stock long term. Along with that, the dividend yield will also go up. But let's run the same calculations here with RYLD and see our goal of getting to, let's say, $500 a month. So if we start with $500 a month, again, we're going to come down until we find $500 a month. So that is about six years, just over 6 years. So that's about the exact same as QYLD. If we did $500 a month till we did $500 is 6 months or 6 years. So RYLD and QYLD are about the same in the fact of how long it will take you to get to $500 a month. Although RYLD has grown with the capital appreciation quite a bit more than QYLD, because QYLD has about a negative 1% growth per year since inception, and RYLD has grown quite a bit more than that. I assume that the outcomes will be about the exact same if we went through and did the $1,000 and $200 a month. So let's try XYLD next. Remember, XYLD is the S&P 500 covered call ETF, and it pays about 23 cents per share in its dividend on average, although the cost basis is quite a bit higher, which will make it so we will only be able to buy a smaller amount of shares. So again, looking at our goal of total dividend paid of $500, let's scroll down until we find that. So about 12 years. So it's about double the time that it would take us on QYLD or RYLD. So if your goal is to get to $500 a month the fastest, our XYLD is probably not the best way to go. Again, this is just not financial advice. Some guy on YouTube is just making this video. It's clear that XYLD is not going to be the best or the fastest way to get $500 a month in cash flow. RYLD and QYLD are about the same Personally, I've been buying QYLD, but I've been looking at getting into RYLD just because it has more capital appreciation and it's about the same cost and the same dividend yield. So I will probably be switching over to RYLD instead of QYLD here in the near future. If you have made it this far, go ahead and like the video. I would appreciate it, and subscribe as well. These videos take me a little bit of time to make, so I would appreciate it. If you haven't seen my other video on QYLD, go ahead and click the link up here or down in the description. And thanks for watching, and go ahead and check out this video if you want more content about these stocks. And until next time, take care of yourself.